Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Thursday, April the 20th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in this go-to session to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our main hypotheses to the day. We do create multiple hypotheses, not to hedge our bets, but in order to have a plan in place so that whatever the market throws at us, we've already thought of what we should be looking for, what we're looking to see, which hypo best suits the market that they're giving us. This is a subscription room. If you're interested in checking it out, please send me an email to quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay. So yesterday, our hypo one is we were finding balance. And I'll go into the composite to show you this, and we were one time framing up. Believe it or not, we're still one time framing up. But our main hypo was a open auction just out of range or just in range, and it moved down, and somewhere between the 42 and the 37, find responsive buyers, initiative buyers, and rotate us up through towards the 49.50 and the key line in the sand. If we broke that, we were looking for the move to the 53 area, 53.54. Hypo 2 was an open auction just in range or just out of range, and a push up to take out the overnight high, failure to get above the key line in the sand at 50.50, and then rotate us down through, okay, to our main target down here at 39, and possibly even coming down to the 32 area, and the key line in the sand below down at the 30 area. And we definitely got hypo 2. We confirmed hypo 2 once we got below the over underline. I posted it in the room, even though I had stopped trading because I had to take some medicine for my hand. But I said if we got below the 42, that would confirm hypo 2, and to look for continuation with the main target at 39, but most likely see the 37.75. And we were looking for that 80% destination trade that would take us through the value area and take us down to the 36 and a quarter, and then we broke that, and we were looking for continuation down towards that 30. So pretty much a trend day yesterday. It didn't start out as a trend day, and it was a slow, grindy move down. But if you got short, either with the break back inside of the prior day or the break below the over underline, you had a nice trade. Of course, I wasn't trading. I did get a beautiful gold trade in the morning, and that's all I really needed for the day. Let's just take a look at the news. We did have Philly Fed Manufacturing Index and unemployment claims. Unfortunately, didn't get much of a movement off of this. Unemployment claims were higher than expected, 244 versus 241 and previous 234. And Philly Fed came out less than expected, came out as 22 versus expected 25.6 and 32.8. 10 o'clock, we've got consumer confidence coming out of the EU. We do have CB leading index. And then at 10 o'clock, we've got natural gas. 10:30, we have natural gas. And then this will actually be something that will probably move the market with everything that's going on with Brexit and May calling the June elections. The Bank of England Governor Carney is speaking at 11:30 and 12:30, and then 1:15 we have Secretary Munchen speaking. So not a ton of news, but news nonetheless. Of course, we are in earnings season, and for some reason my earnings whisperer keeps crashing on me. Tonight we've got the big one will be Visa tonight. See, it doesn't want to open up. They're having problems with that website. Let me try to open it up in Chrome and see if it'll open up there. No, it's not gonna open for me right now. I'll have to bring it up later in the room. So let's go and take a look at the macro to micro. I always like to start my day with a simple candlestick chart. I start with the monthly. I use my paper money because it's got live data for me. And I just do my homework using this. You can see I use a 9 EMA and 20 SMA. This is a 50 EMA and a 50 SMA. I've just added those for the time being because we've hit some psychological levels and I just want to pay attention to them right now. But normally I just use the 9 EMA and the 20 SMA. And I'm looking for where we are within the time frame in terms of strength of trend. Do we have good slope and separation and a strong trend, or is the trend being challenged or violated? Of course, I'm looking for chart patterns as well. On the monthly, we had good multi-year upward trend. Then at the end of 15, beginning of 16, they challenged it and then they took it back. Then we had this rising 3 pattern on the monthly, and we got the continuation and a move to the all-time high. We've got good slope and separation. The trend doesn't even get challenged until we get back into the 2200s. Going to the weekly, you can see that again we've broken below the low of the prior week, so we are starting to one time frame down on the weekly. We had one time framing up, and then we had that week that we talked about when we violated the 8-week one time framing up. That was our first sign that we had some weakness coming in, and we were looking for the gap fill. They came down and filled the gap, and we're getting continuation down right now. Next key level to hold is going to be in that 23.13. I'm actually looking at the 23.1275. I'll show that to you on the composite, but we are seeing some weakness of the trend on the weekly. On the daily, you can see this is where we were talking about, breaking below the 50-day moving average, both exponentially and smoothed. We closed yesterday for the first time below for the second time below the 50 EMA. Right now, we're trying to get back above it, and this is, this goes all the way back to the November the 8th election, which I find kind of interesting. So that's why I'm keeping an eye on it. But you can see that, we are getting a trend down, even though slope and separation is not real strong yet. They're having a hard time. They've been unable for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, for 2 weeks now. We basically have not been able to get back above the 20 SMA. So that is showing weakness. We're not getting the strong trend down yet because we get stuck in these balance areas that we'll take a look at. Moving into the intraday, you can see that we were getting a strong trend down. They took it back, and they've been fighting it, and we're getting this consolidation pattern, and we're getting asymmetrical triangles. So we have to look for which way we're going to break out of this balance. Going to the 1 hour, basically the same thing. We did leave a naked cross below us at 37.75, so if we break below the 39, that's your first target. But right now we're back above the 9 and the 20 and the 50s on the 1 hour. Going to the 30-minute, you can see that we do have slope and separation. We created a bit of a technical gap. We had a Mr. Sneaky. They closed the technical gap, but they're holding the 9 EMA right now, so the trend is up on the 30-minute. And 15-minute, you can see that we've gone into this consolidation in around that 39. the overnight VPOC, the balance area overnight coincides with the 5-day microcomposite VPOC that we have, and we're breaking below the 9 and the 20 right now, and basically chopping right around that 9. So no real trend on the 15-minute. And then the 5-minute has broken down, and we're below the 9 and the 20 and the 50s, and just chopping around. And so let's take a look at that balance area, because that's important. So this is my composite. So just to explain this for some newer people, I started my composite on the gap up day on the 13th, February the 13th. The black overall line encompasses all the balance that we've been in here. It's basically a 50-point, 60-point balance that we've been in, and it centers around the 59.50. And then on the breakdown day, 3 Tuesdays ago, I created a new shorter time frame microcomposite, and its most traded price, or MCVPOC, is 53.50. That is in this upper distribution. There's also some shorter time frame microcomposites that I'm looking where the balance was. This one's here, right here, because this 64.50, 64.75 is where the sellers keep stepping in to halt the move up. And then I've created a new 6-day microcomposite, which basically shows the balance around the 38, 39 area, and the fact that we're balancing out here. The breakout is coming. It's just we're just having such a hard time seeing who's going to stay in control. But I wanted to note that we are one time framing up again. Okay, higher lows on the lows of the RTH sessions, and we're finding balance. So the microcomposite VPOC, or sorry, value area. Sorry, the composite, I can talk today, the composite low volume node is sitting right on top of the microcomposite value area high right now. I'm still going to use 50 because I want to make sure that we're completely above this 48.50, because we got to the 49.25 yesterday and the seller stepped in. So I still think 50 is a much more important number, and above that I'm looking for a move up into the 53 and 59 and break out of this shorter time frame balance back up into this upper distribution. We have undetermined fair value in both these double distribution zones. In the upper one we have 64.50, 59.50, and 53.75. In the lower one we have 45 and 39 and 42-ish. Key line in the sand is going to shift down below that 30.25, back down to the 28. Our key line in the sand above is going to remain up at 50-50. So taking a look at the Globex. The Globex is basically almost 100% net long. We've pretty much, probably 90%, we've pretty much opened and held, and we've been chopping around since Europe opened up. We've been chopping around in the middle distribution of yesterday's RTH session and finding balance around the 6-day microcomposite VPOC at 40. We are creating a week high because we're one time framing up. I am thinking that the move is going to be up, and that will remain the key for me until we break below the 37. And 37 is going to be my over-under line today for a push down to test that low from yesterday. And we have both a week high and a week low right now. So it's really anybody's guess which way we're going to go. So key line in the sand is going to shift down to the 28. My over-under line is going to be, I'm going to shift it down from the 37 down so it sits on top of the value area. The value area, I just want to make this clear because this was a trend day, and the fact that we left value above us this is a trend day. In trend days, the value areas do not have much weight. But the LVN here at 36.50 and the LVN here and the Globex at 37 is what I'm using and why I'm using them for my over-underline. And what does an over-underline mean? It means my focus is shifting from the hypos that take us lower versus the hypos that take us higher. And it just gives me a confirmation of, do I want to be looking for trades short or do I want to be looking for trades long? And, just as simple as that. The key line in the sand is a little bit different because then with breaks there, I'm looking for a much bigger move and a key break of balance and going back into price discovery. Our overnight high currently right now is 41.50. Our overnight low is 32.25. Our VPOC is not likely to shift. It's right in balance right here around the 40. And that's really all the information that I need from the overnight session. So just putting our levels in. I will be watching the 31.25 for a break below and a move down to take out the target of the prior day low at 30.25, and more importantly, a move down towards that 28, and that we have a naked VPOC down here, a naked close down here at 27.50, and we have a naked cross down there as well. So I'm targeting that and a shift down to test the prior day, the key line in the sand. Off of the overnight high, our 20-period full session average true range is running 1968. So off of the high overnight of 41.50, our downside ATR target is going to be 22. And that 22, remember what that 22 is. The 22.75 is our week low, which is also a weak, meaning not strong, low. It's a double bottom down here. And we have range capabilities, okay, based on the average true range to get down there. So any break below the over-under line with confirmation of the key line in the sand, you're going to be targeting this 22.75 and a break of 22.75 and a continuation of this trend down. Above us, our levels, I'm going to be using the, there is a 43.50 LVN. I'm going to be using that as a trade level, targeting the 45 open from yesterday and the 46.25 VPOC that we left, the naked VPOC that we left above us. And then my key line in the sand doesn't change, but I will be looking at that 48.50 as a warning line to get long into the 49.25 test and a test of the 50. And then we have this cluster up here, in around the 52 and 53 area, the 53.75 microcomposite VPOC, the 52.75 naked close, the 53.25 naked VPOC, and 52 is our non-farm payroll. And we also have a naked close here at 51. So a lot of cluster around here. And this is basically my main target right now for Hypo 1 on the day. With our overnight low, our daily upside ATR target is 51. Is it 51.75? Sorry, let me just check this. Our overnight low is 32.25 plus 1968, 52. So our daily upside ATR target is there as well. Our weekly ATRs did not change to the upside. They did change to the downside. Our weekly downside ATR target is 13. Our open of the week is 57.50 50. We have 2 sessions to go. I don't think critical mass is going to come into play today. So, couple things I want to just point out. First of all, we do have a zipper measured move, although I don't put as much weight onto these zipper measured moves when we go from one session into the next session. But I not so much going into the RTH, because the RTH you've got new participants that can take it in any direction. A lot of times I'll look at the zipper measured moves to get taken out in the Globex if they're carried over from the RTH, but less so. But I still watch them because it gives me a clue. There's the impulse wave, here's the zipper, and the primary measured move is 43.50, and the extended is up here at 45.50. So in terms of hypotheses, my main hypothesis for the day is continuation up. We've found buyers. We're one time framing up, higher lows, and the can't keep a good SPOO down, I guess. So my primary hypothesis is an open auction in range, a push down towards the 36 area, possibly even the 32s. But I'm looking for responsive buyers to step in here again and hold the low from yesterday and push up through into my main target for the day up here in the 50 to 53 area, and then chop around here with maybe a late day probe up into the 59 and coming right back up into the longer time frame balance. But I don't think we're going to get a lot of range extension today. So that's my hypo 1. Hypo 1, a move down, find buyers between 36 and 32, rotate up through the range, take out the naked VPOC, and come up, chop around in the upper distribution, and then break up into the 53 and take care of finishing the auction up here and coming back up into the balance around that microcomposite at 53.75. Hypo 2, which I also have to give pretty much equal weight to because of the fact that we did have a trend day down and we could get continuation of that trend in the RTH session, is an open auction in range, a push up, and somewhere between 43 and 48. Failure to break out of the 49, finding responsive sellers and rotating us down towards that 32 area, chop around here and push through down to test the key line in the sand at 28 and getting a late day probe down into 22. Basically, a break out of balance from where we are right now. Hypo 3 is a open auction in range, failure to get below the 36, either an open test drive testing the 36 and the 41, and then buyers taking control, pushing us up into the 52, 53 area, and then get continuation and a break of this balance and a move up into the 61 to 63. I think it's less likely, but I have to put it as a possibility. And then Hypo 4 is a breakdown day, a continuation trend down, a failure to take out the naked VPOC, leave that alone, and then push through, break out of the range, come down and chop around the 27 to 22 area, and then get capitulation of the buyers and push down through into this 09. And again, Hypo 3 and Hypo 4 I think are less likely. I think we're going to be somewhat range bound still, and I think we're basically going to test one side of the balance above or below us with my my bias. As long as we hold above the over-under line, my bias is a move up into testing the upper side in the 53, 54, maybe 59. Okay, take a quick look at gold. I shouldn't have done that. Where's my gold chart? Oh, there it is. Oh, I'm going to move this over. You can see that, we broke below that 83. I said if we broke below the 83, look for them to come down to the 78, 79. That was one of our considerations for yesterday. We did that yesterday, and so far we've been trading inside of the wick from yesterday and finding some balance. I want to just draw a quick 2-day profile, see where the 2-day balance is, and it's right around the 80, and we're currently chopping around that. Key level to watch will be the 77. That breaks us out of the value, and I'd be looking for a move back down towards the 75. And anything below 75, then I think we're going to start getting a trend. But remember, I said we had a $49 move up. I said don't be surprised if we get a $18 to $25 move down, and so far we've come down 22 bucks. This is normal, okay, OTF rotations within gold. So you can see these moves down, okay, 22, 18, 25, okay. These are normal rotations on the OTF time frame. The average large rotation is between 35 and 42, and we got a 49, so it's no surprise that we came back a bit here, but we should start finding some support here in around the 22 to 25, and so far we've found some buyers in the 22. But it wouldn't be surprising to see a little bit dip down into the 75 level to pick up buyers down here and then get the continuation. I still think with the move up to the 97.40, they're not going to leave the 1300s alone. I think we're going to see that 1300. Of course, if for this to happen, we've got to see the ES and the other indices make a break to the low side. So I think we're going to see a choppy day in gold. We're really got a tight range so far. If we hold the 77 and come up and accept the 80 again, look for them to push through again to that 83. And if we can break above the 84 level, then I'd be looking for a move up into the 89 level again and back up into this balance. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.